I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Glad to be back, Jim.
A lot of people thought the tariff wars would be creating major swings in the market. Have we seen that?
We have, but maybe not where you'd expect it. The markets have been remarkably resilient. I mean, the moves that we've seen on a day basis or even a week basis in response to what are really substantial events, I mean, world-impacting events on the economic scene, globally. These are big things that are being renegotiated or simply canceled, changed, upended, and so on. So this is important. And it's striking to see markets, broadly speaking, remaining so blasé about these large events. That said, we have seen the hit in commodities in a big way. And I see that as at once, ill-placed in a way. I mean, the population is still growing. For now, at least, the global economy is still growing, and that means that the raw materials that feed that and clothe those people and give them cars and put roofs over their heads, those are all still needed. So for those prices to sell off out of the sphere is really interesting. And it's also contradictory. How can the global economy be doing great and the raw materials that fuel it not be doing great? I think, if anything, we have a leading indicator here in the commodities, which have seen extreme volatility as a result of the trade war. And I think there's a specific reason for that, and that is one of the major objects, of course, of the trade dispute is China. China consumes the lion's share of many major commodities, natural resources, and the Chinese are extremely sensitive to bad winds. They're not known for a let's wait and see kind of attitude. Well, let's see what happens. If they think the tide's going to turn against them, they want to bail ASAP. And it's just sort of a cultural thing that I've observed on numerous trips there and over the years. So when they tighten up, then that has an impact on the commodities. Now, so if, let's say, it's all the art of the deal and the trade war goes away and we get new agreements and everybody lives happily ever after, and the economy continues recovering, we should see a rebound, really an extraordinary rebound in the commodities. But if that doesn't happen, if we really are headed for, worse or some sort of major market reset on the global scene, then I think the commodities will have been a leading indicator, and they are maybe just a mild or modest indicator of what's going to happen to a way overheated market on Wall Street when reality sinks in.
Maybe left out of the equation here is India, where they still have a growth rate of 8% despite a declining rupee. Are they the X factor here if China, because they haven't been targeted with these tariffs, whereas China has, and at some point people expect India to be the world's biggest economy?
Yeah, that's certainly a factor, and maybe that's one reason why things haven't gone south as far or as fast as they might. And it's interesting, too, that in face of all this volatility, that the precious metals have been under pressure. And China and India are both countries where people buy a lot of those. But China actually buys more than India. So the Chinese going into fear mode is not only bearish for commodities in general, it's been, visibly bearish for precious metals at a time when you would otherwise think precious metals would shine. And what happens next with India? Does it remain exempt? I can't say. I don't know that anybody, even in the White House, could tell you if that's going to remain or whether that's going to change or not. There's certainly a case to be made that jobs have been exported to India, and somebody ought to do something about that. So who knows? That will change. But I don't think India remains isolated for long. It has to deal with its global partners. and then they're impacted. India is impacted. But it kind of brings up the broader question of risk in emerging markets. We were talking about that a bit off mic before we started, Jim, and as you know, those can be extremely volatile. And, maybe that's one of the next dominoes here to go.
Is Italy still a huge concern, and Greece?
It wasn't so long ago people were talking about the so-called pig, right, bringing the whole European bandwagon to a screeching halt. It doesn't seem to have happened in spite of significant electoral changes. The political changes in Italy are significant. Greece is officially out of bailout mode now. The powers that be over there seem to have kicked the can down the road. Does that mean everything is safe and hunky-dory? No, not necessarily. But it does mean that it's not time for the Chicken Littles to be running around saying the implosion is tomorrow. Europe has its problems. For now, they seem to be dealing with them. There is growth over there. The European Central Bank is formally ending its stimulus program. So I still see plenty of signs of trouble, but I would not bet on an imminent collapse in Europe right now. And with Europe and the U.S. both looking up, there are a lot of people that are calling for correction, and rightly so. I think that'll eventually be right. But it's very dangerous to say that, that inevitable is now imminent, let alone now. I have heard some calls saying, when is now? But I'm not seeing it.
Are people still, say, quietly selling off a bit at a time and resorting to cash?
I couldn't tell you that. I'm not an ordinary person. I strongly of the view that the weakness that we see now is temporary, both in the commodities in general. The world needs stuff, and that's not going to change. Even if there's a major correction, real correction, and the global economy goes into recession, that would last years. It would be painful, but it's temporary. And we don't know that will happen. The powers that be did what seemed to be the impossible after 2008 and kicked the problems down the road. They might do that again. But overall, the narrative right now and the evidence right now, even the cooked funny numbers coming out of Washington and other places, they still support a growth scenario. So while there's a growth scenario, I view weakness in commodity prices in general as a buying opportunity. I have been buying this summer. And in light, in particular, of all the chaos in the world that just never seems to subside, but only increase, I very much see the weakness in precious metals as a buying opportunity personally, and that's what I'm doing with my own money. And whether others are quietly going to cash, I don't know. Inflation's picking up in the U.S. I don't see any reason why people would feel a burning need to, little guys out there, to sell grandma silverware and hoard paper dollar bills. I don't see that. I could see Wall Street fat cats that are nervous about the record-long bull there coming to an end. I could see them going to cash rather than gold because, they think gold is a barbaric relic. But I don't see it as, a broad social phenomenon right now.
We'll have more with Lobo Tiggre right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Lobo Tiggre. Lobo, silver's at a 31-month low. Is it one of the best bargains out there right now?
I agree that both precious metals are a bargain. I try not to be too religious about silver versus gold, and I probably get in fisticuffs if I say too much more about that, because I know both sides have their adamant fans. I do not believe the gold-silver ratio is highly predictive. It does, when it goes to extremes, tend to come back, but it doesn't tell you which of the two metals will go up. It can come back because the higher one can come down, or it can come back because the lower one comes up. And people want to believe that the lower one is going to shoot upwards with a vengeance, but that's not always what happens. So that silver has gotten whacked more than gold doesn't necessarily make me a silver bull. What makes me a silver bull is that I think the actual supply and demand constraints going forward are significant. Most silver is still a byproduct of base metal mines. Supply constraints are real there. Copper is looking at supply deficits for years to come, and despite lower prices, we're not seeing the rapid leaps into the space that would change that quickly. And a lot of silver comes as a byproduct of copper mines. Zinc prices are down. A lot of silver comes as a byproduct of zinc mines. So it's not so easy as just say, oh, well, silver's cheap, therefore it has to go up. But I do think that the uses of silver continue to increase. It is both a precious and industrial metal. And if it gets into a supply squeeze, we could see one of those breakouts that silver does periodically get into. But I don't see just the fact that it's cheap being a cause there.
Is there a supply squeeze right now, or one looming?
I don't have the latest math on that, Jim, so I don't want to pretend to know something that I don't hear. What we do know is that silver as a secondary, byproduct is being impacted by the slowdown in other commodities in general. And we know that the use in photovoltaics, the solar panels, and other uses is going up. And so even if we have the supply crunch coming, if at the same time you have precious metals going down, you could see silver prices drop despite an actual, current live happening now type supply crunch. Because when gold goes down, silver goes down with it. They move together. Sometimes, as we say, one rises higher than the other or drops lower than the other, but they generally move together. And I'm not a technician, but I have to say, the causes of weakness in precious metals right now, nothing has changed in the last week or in the last couple of weeks since we talked, Jim. And the technicians will tell you that there's no support at the current levels. So even if the answer were unequivocally yes, silver is in a short supply situation, a supply deficit is going to put a pinch on supply, that would not necessarily mean that prices have to go up in the near term. In my own case, I try not to worry too much about where the exact bottom is. For me, I have a longer term view, and cheap is good. And I do think that silver will benefit from both higher precious metals prices in the future, as well as the supply crunch and the increasing industrial uses of silver. So I do like silver, and I have quite a bit of silver in my portfolio.
We'll have more with Lobo Tiggre right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, what's your position on other metals? Are there any bright spots out there right now?
Well, I'm really glad you asked that, because a lot of, mining types and people into the junior exploration side where the 10 beggars lurk, they're very feeling beat up right now and kind of depressed with all these metals going the wrong way and things not going the way it seems like they should with precious metals and so on. But there are some bright spots. In particular, uranium has notched up again. That's several weeks running now, where it's not only maintained its multi-year high, but keeps inching up every week since it achieved that. That's quite significant to me, though perhaps more important is that the lows since the bottom in early 2016 have been higher lows. So of course it'll go up and down. I'm not saying it's going to go straight up forever. But we have seen, higher highs, higher lows. That's an uptrend that I'm betting in personally. I'm investing in that space. And the other one is actually vanadium. Vanadium prices have done very well this year. And that's interesting because it's a smaller market, and there are projects on tap now that could easily swamp the supply deficit. It is, by the way, as I understand, the latest projections that I've seen. These are third-party numbers, so I don't want to stand for them, but I have seen projections that say that vanadium is actually in structural supply deficit at the moment. And into the order of I don't want to, it's not my number, so I won't go there. But I understand that it is in supply deficit. But there are significant projects on the books now, advancing through the feasibility stages, so that may not last for long. But even a feasible stage project still has to be built. So I think we could see a couple years of higher prices for vanadium, and it is an area where I am doing research right now. The warning is that it is a very small project. If there is a great big new mine about to come online, and some of them have vanadium as byproducts, so you can't just screen for vanadium. You have to look for uranium and iron, even titanium, other things that have vanadium in there, to make sure you don't miss something big about to come online. Because it is a tiny market, a single major new supplier could radically change the price dynamics. You need to be very careful here. But it looks very good, and I am researching this now.
For us vanadium rookies, what is it and what does it do?
Well, it's one of those alloy metals generally. It's been used in a lot of high-tech alloys, but also in sort of the base industry of steel. It's a steel strengthener. It's used a lot in rebar, for example, to make for better, stronger, more flexible steel. And interestingly, in this front, that the Chinese recently upped their regulatory requirements for vanadium content in their rebar, which, with all the construction going on in China, is a significant issue. But the big game changer here is actually going back to what you and I have talked about many times, is the new energy paradigm, what was once alternative energy now becoming the new mainstream of energy. And these technologies, particularly the ones that are not stable baseload power, like wind and solar, that rise and fall with the weather or the turning of the planet, they need big batteries to make them more stable. And it turns out that vanadium, there's a vanadium flow technology that it makes a really big but really efficient and very long-lasting battery, unlike lithium batteries, which age more quickly. So it's cheaper and it lasts a lot longer, but it kind of needs to be big. You can't put one of these in your pocket. There's no, at the moment at least, viable technology for a vanadium battery for your phone or even your car at this point. We're talking industrial scale batteries. But that is an important part of the new energy paradigm picture. If you've got a place where you've got a lot of wind, but it's intermittent, then what you need to turn that into stable power is a really big battery. And vanadium seems to be one of the best solutions for that right now, these new vanadium flow batteries. Well, actually, they're not new, but what's new is that they're actually being deployed on a commercial scale. You can do a Google search for that, and you'll find projects being built right now. And because they're big, and because the vanadium market is so tiny, these projects can actually, a single project can actually have an impact on the vanadium price. So there's a potential here for a substantial supply squeeze, but I can't quite say that it's happening yet. We have seen some of these new big mega battery projects come online, but I can't really say that it's a global phenomenon with dozens of them being built around the world yet. When that starts to happen, then I think we stop worrying about whether China's going to use more vanadium in its rebar or whatever. That the battery market is going to become the driver. That's not there yet, but it could be coming soon, and it's something I'm watching closely.
Lobo, thank you so much for chatting with us.
Well, thank you, Jim. And as always, if people want to know more about what I'm thinking and what I'm buying, they can find out at independentspeculator.com. Thank you.
My guest has been Lobo Tiggre. He's been speaking to us from Puerto Rico. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. Questions can be sent to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.